Hey everybody, Chuck Barone. Wednesday, February the 7th, 2023. Crazy day today, man. It was I guess really a little less crazy than normal. Does that make sense anyway? Not as crazy today, but still crazy nonetheless. But before we get into the show, I just always, as always, want to welcome you guys to the show. Thank you for your support. What you guys do for us every day keeps us going here. We appreciate you guys. Markets today, well, there's a whole lot of nothing in the markets today. Stocks did rally up across the board. Decent day for the stock market. I think it was just basically a technical bounce. Not much really in the markets today to brighten things up. The same news that brought the market down yesterday is the same news we're getting today. So the psychosis continues. The market, I think that truthfully, stocks always want to rally. People are always going to be more bullish than bearish. So stocks really going out of their way to try to find a way to rally. And hopefully they'll find that way. It's good for all of our viewers, good for my portfolio, so we want stocks to do good. Just not so sure that this is really a rally that we're seeing right here. Today the bond market down small, 10-year drop rising 4 basis points, 3.67% for the 10-year. The 2-year basically flat today, 4.46. So we got basically almost an 80 basis point diversion here, or inversion. Bond market telling us there's going to be a recession, telling us it's probably not going to be a super mild one, but the rest of the data, it's kind of like that 2 consecutive negative GDP quarters last year had me convinced we were on our way to a recession and we're already in one. And then, go figure, things just changed the second half of the year. The bond market's telling us recession coming. A lot of the data we're seeing tells us probably not. We'll be monitoring. Dollar today down small, 103.34 on the index. A good strong number for the dollar. Up almost 2 points on the index from its very recent lows. Nice little bounce for the dollar. The market believing rates will go higher, stay higher. Good news for the dollar. Metals today down small with the dollar rallying a little bit. Gold down $1.20, $1,872 and change per ounce. Silver down 34 cents, $22.27 per ounce. Metals, these prices have come down a little bit from their recent highs, but they're still good, strong numbers. I really see 2,000 gold, 25 silver, probably pretty quick, guys. Oil up today, 34 cents per barrel, $77.48 for a barrel of West Texas Intermediate. Oil creeping back up, but not really enough, I don't think, at this point to affect gas prices. Was in that 80 to 85 trough when prices were a little bit higher than they were. Was down into the lower 70s, now coming back up. Oil hasn't really found a home yet. Hasn't found a real solid number. It's been gyrating all over the place. I think that this price actually might be a little bit high. I guess the spring rolling around now, they're figuring out a little bit more driving maybe. Driving season coming up, always going to push oil prices up. I still think at $77 might be just a little high for right now. Bitcoin today rallies up $569, $23,280. Bitcoin just holding its own, man. I got to admit, I was ready to kind of light the funeral pyre for Bitcoin, but man, a nice rally, and it's holding that rally. The numbers are there. I think that if that rally was just to get people in, suck in some fresh money, they did that. You would have seen the sell-off by now. You're not. So this looks like genuine support for Bitcoin, a real bullish sign. News you guys need today, basic stuff today, guys, not a lot. U.S. imports rising in December. We're bringing in more goods from overseas. Trade deficit jumps 10.5% in December, big number, $67.4 billion to the negative versus $61 billion in November. It's a pretty big jump, man. Wow. Imports up 1.3%, exports down 0.9% from November. I guess we're selling what we are manufacturing here, but we're bringing in more crap from over there than we're producing and selling here. not a new story. This is interesting. Today I was reading, for the past few years, the Federal Reserve, after their QE and their gigantic portfolio of treasuries and mortgage-backed stuff and all the bonds they're holding, was basically giving the interest those bonds produce to the Treasury, amounting to billions of dollars a year in revenue for the Treasury. Well, now that's all done. Those bonds are now losing money pretty dramatically as they retire them. They're having, with rates gone up so much higher, it's costing the Fed way more to create new debt than they're getting on their old debt. They're now losing billions of dollars a month, and they're no longer going to be able to prop up the Treasury with all those extra billions of dollars. This is all part of this big, crazy, stupid story of the perversion of our system these days. This can't be good news for the Fed or the Treasury. The Federal Reserve itself is losing billions of dollars. What does that tell you, guys? Sad news. This was an interesting one, too. They started these companies called power buyers. And what these companies were doing, in essence, was creating bridge loans for people who wanted to buy a house or sell a house to buy another house. So what these power buyers would do is come in, buy the seller's house for cash, then with the agreement that the seller would then buy that house back later with a fee added on for the bridge lender or the power buyer to take that property off their hands so they could make a cash offer for the property they wanted. Well, what's happened is that system worked great when the boom was rolling, but toward the end there was a little bit of a problem because a lot of these people were selling, taking the proceeds, buying that new house, and then reneging or taking way, way, way longer to follow through on their end of the deal and buying the original house back. Well, news flash. Those power buyers who were making money hand over fist for a little while now are stuck with hundreds and hundreds and hundreds of properties. They're not designed to be buyers and holders of real estate. They're not designed to actually even be sellers of real estate. This is going to eat those profits alive and probably going to be the last we heard of this one-time niche business. I think that one goes the way of the dodo, guys. Crazy, crazy stuff. So today we saw Fed yo-yo, Neil Kashkari coming out, and he's saying, this is all spook the market time, guys. He said rates will probably hit 5.4% before they pause, and the jobs report solidifies his opinion that they need to go at least that high. Well, I don't know how Neil does his math, because the way we're sitting right now, with the 0.10, right? We were not at 0. We were not at a quarter before they started all these rate hikes. We're at 0.10. So right now we're sitting at about 4.35%. We know we got another rate increase coming. Or maybe we're a little higher than that. Anyway, the numbers don't make sense because if the Fed does 2 more increases, I think we're at 4.6 right now. 2 more quarter points will get them above 5% to 5.10. That's what I see happening. Here's the thing. Neil sees one more bump that we're not seeing. But the weirdness is that he's seeing 5.40. I don't know how you get there from 5.10. So that's interesting. But nonetheless, as always, the Fed coming out to spook the market, to drive home the message that rates are going higher, they're going to stay higher. This is the unanimous message. We're hearing a little bit of wavering about a pause, but we're certainly not hearing any Fed governors or principals talking about cutting rates. So there's no pivot coming, and that's that. Today, Powell was out on his speech. I've been busy today. It's been a crazy day. So tomorrow, I will get into the aftermarket today, and after we wrap this video, I will get into that speech looking for the nuggets that you guys need to know. I guess he was talking about the deflation. They call it disinflation. I think the proper term is deflation, but anyway, Powell going on to say that disinflation has started, prices coming down, inflation coming down. We'll see. if that continues in a straight line. I seriously doubt it. Or we get some chops, and it requires Powell to be a little more nimble than he may be. Anyway, guys, that's it for today. As always, we appreciate your support. We appreciate you guys, everything you do for the show. You're hitting the like button, sharing the videos with your friends, your questions and comments. Hang with us, guys. We're in the process of making the show better for you. We appreciate your support. We'll be back tomorrow. Big jobs numbers tomorrow, guys. Till then, take care. Thanks.